Good morning, everybody. And let's get the screenshot up here and begin. Okay. Quick recap of yesterday was a interesting day, at least from where I was sitting. So we kind of had a weak opening and we're hovering near the 6650 round number. And we were kind of stuck there most of the day. Here's where we opened, right? We opened around 50 and we kind of couldn't really get off off the ground. Um, Kind of went below 45 a few times. Just kind of stayed in a very tight zone. Then at around 1:30, right here, see that? Hold on, let me show you. Then at around 1:30, right here, 1:30, 1:15, 1:30, JP Morgan executed their collar restrike. And part of that process is they sell that they buy 5% out of the money, 20% out of the money, put spreads for the next quarterly, the D's quarterly annual SPX option complex, and they sell whatever call it takes to pay for it. It's not 3%, 5%, whatever percent. The percents uh, are the collar, and they so. But in order to do that and not quote unquote break the market, or at least break the market makers who then will have be hedging in the wrong direction when all those negative deltas come in. They buy a deep in the money one delta call, roughly half the number of what they sell. Why? Because they're selling 50 delta more or less, and so they're buying half that one delta. So they buy that in the zero DTE, and they bought, I forgot what it was. They bought like $100 in the money, and that has the effect of being supportive for the market. Now, I've been told by people that theoretically that's not supposed to happen. It shouldn't have that effect. Fine, it does. I've been watching this for years. It does. 100% of the time, like you could bet the farm, no, but often enough that it's not coincidence. And way more often than not. And then that sent us up. And if you remember in the morning note, and it was real clear, I pointed it out here. We had negative, and maybe I can go back in time. We had market makers short delta, customer long calls over 60, a path all the way up. And once we got over 60, 65, then market makers were hedging in that direction, and day traders were trading and buying, and we had a party. And we got overshot 90 and came back down. Then once the day was over, then JP Morgan restrikes the collar if it's moved enough. So the 5% down, now we moved enough that they had to move it up a couple of strikes. So now they're selling those deltas again. Yeah, they're buying back and they're selling, but they're adding some negative delta without the support, plus the support of the zero DTE call that they bought is gone. And what typically happens is we fall back to where we should have been, for lack of a better way of putting it, without the collar stuff. And we fell back to 70-ish. That made sense. 66, 70. That's my interpretation. Then the overnight session, government shutdown. Oh wait, what's going on here? Do I have the right time frame? Yeah. Government shutdown, market in turmoil. We came down to what's going to be the bottom of our chop zone today. Just coincidentally, or maybe there's no coincidence, um, where there's a cluster of supportive options flow. Then we had some newsy stuff, ADP, I don't know, whatever it is. We had some news, we had some mortgage things at new home applications earlier today. Maybe that was this thing over here, this bar that sent us up, somewhere over here. And now we're kind of back where we was, 66.50, give or take, right in the middle of the chop zone. And I was being generous by calling that the bottom of the chop zone. We could easily call 45-ish, and we'll look at why in a minute. Now, I happened to be up early, and I happened to catch this scalp here with futures. I don't usually do that, but it's got such a perfect failed breakdown. I kind of joke with some friends, and they were saying, "No, we got to wait for the retest and confirmation." So I got to sit there and wait, and I front ran it a little bit, and I got out of most of it here. I kept it running till around here. No, I kept it running till around here, I guess, and then by 7 o'clock I had to write my note, whatever. So I said bye bye. Okay, so great. Okay, Doc, thanks a lot. So what about now? All right, I'll tell you what about now. Let's take a quick look at a few things. We're going to look at my volatility dashboard, and just as a reminder, I've been reading Taleb's dynamic hedging of vanilla and exotic options, mid 90s tome or late 90s tome. And in chapter 4, he talks about different ways to smooth out the data. And that's where I got this Hearst and all this other stuff, this PVE, and found these indicators on TradingView, mixed in a little secret sauce of my own with the VIX VVIX correlation, and applied those indicators to smooth that out. And this is what we got. And so what's this telling us, Doc? Okay, what this is telling us, here's the daily. The daily's not telling us much of anything other than a little bit of tension rising here or there on these days. The Hearst, which is basically a smooth moving average using some kind of time series, is bullish. We didn't know that, right? And the 65-minute, which statistically just give us better numbers, less noisy. We're kind of in this no man's land. And we'll kind of see where we are. And the volatility indicators here are kind of saying, where are we? Hard for me to read the number. Okay, so this is saying that this isn't noise. That what's going on in the VIX space isn't noise, that there's something potentially going on. So let's go over to the VIX space now and see what's potentially going on. That's the wrong one. That's the wrong one. I'll find it. Where's the 5-panel one? 6-panel one. 6-panel, there it is. Here's the right one. And so what we're looking at is VVIX. Here, let's start with that, the volatility, and that kind of spiked a little bit yesterday. Not too crazy, got to 98. But the VIX, the darn VIX itself, spiked, well, in the overnight session over 17, yesterday above 16, and I've been talking about, and I don't have a screenshot handy, I'll try to have it for tomorrow. I've been talking about what's going on in the VIX complex in terms of where customers are long and short, and we'll look at that in a minute. But long story short, 17 is a big inflection point. Between 17 and 20, except for a little stopping node somewhere around 18-ish, 17 and a half, kind of right where we stopped. Market makers are going to have to chase by buying VIX futures. And so now we don't see that stress as much, or we didn't see that stress as much in the VVIX as we saw in the VIX yesterday. So, that'll tell us that demand for VIX hedges is kind of already in place. And this was more an SPX, more of a local buying. Here's TDEX. We see there was some tail hedging as TDEX. Let me look at SDEX over here. TDEX is 3 standard deviations out. SDEX is 1 standard deviation out. And we see we got pretty stressed yesterday. We got kind of a little stress. So there's tension under the hood. Now I want to change this to the move index. If I can find MOVE. I keep adding it to this dashboard and it goes away. Where is it? Okay, so we're just going to do it the hard way. Add MOVE. Okay, here we go. The move index. So what's the move index, you might ask? The move index is the VIX of bonds, for lack of a better word. Developed by Harley Bassman in the 80s. He was at Bank of America at the time. And basically he got the job because he was kind of really the only one that knew how to use a computer and was the math geek. He's since gone on to work for, I think, PIMCO or Grossman, one of those big guys. And now he's a consultant at Simplify. And it was also my brother's patient. And my brother has fancy boutique practice in New York City on Park Avenue. So that's how I know Harley. So the move index is not that stressed yet. And obviously it's more stressed on FOMC day. But with the government shutdown, that's going to be a canary in the coal mine. So I'm keeping an eye on that. So that's why it's on my dashboard now. If it ends up being a nothing burger, then I'll take it off. Speaking of the government shutdown, per the Wall Street Journal, and I'm sure a lot of other people, with the government shutdown, the Bureau of Labor Statistics isn't going to be publishing the non-farm payroll or any other numbers, I believe, on Friday. Well, that's going to make for interesting trading, speculation, whatever. So we have that thrown in the mix just for fun. I don't know if anybody has any late breaking news on that, but that's the last thing I read at 4 or 5 in the morning. I've been kind of looking over charts and coming up with my plan and everything else. Where are we? Okay, so let's take a quick look at options depth dashboard here, or my dashboard option depth. Okay, so right here between 66.45 and 66.25, we have a decent cluster of market maker long gamma. Long gamma is supportive. I'll say it every day just because not everybody breathes this like I do. As we go down, market makers start to buy. As we go up, then they're too long and they sell and we find a balance point. If we're approaching it from the opposite direction, as we go up, they sell, but then as we go down, they start to buy. Now that's if we're just between two nodes. Now there's all this other noise in between. The stuff that's on the left is customers long, market makers short. Market makers hedge in that direction. So they hedge opposite this direction, slow, 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 but they hedge in this direction. And that's what gave us that beautiful setup yesterday. We had a ladder going up over 65, 60, whatever it was, all the way up. So if over 45, which I believe we are, ladder up to 60, stall when we get into this influence. So let's see how that worked out. Let's just see how that worked out. If over 45, stall up over 60, 65, and here we are at 60 where we're supposed to stall. Yeah, 661 equivalent right now. Yeah, that's why I have this in case people. This is called SPX on TradingView, and it corrects or interpolates SPX price based on what's going on in the E-minis. And so what do we see for today? Well, okay, a few things. One, let's get back to here because it's important. These aren't very big numbers. This whole thing of 500 contracts, these aren't very big numbers. A couple institutions come in with 1,000, 5,000 contract orders, and this stuff gets moved around significantly. Some days it's bigger than others. Some days it's more predictive than others. It's kind of thin. Don't torture the data, but we still get reactions there. Up on top is kind of a little chunkier. So over 80, 6,700, etc. Up there, market makers are long. People sold calls and puts actually, and so we kind of would stall on the way up. Really start stalling at 65, 70, 80 is where the real stall starts, and then of course, what is this, 90, 66, 90, 6,700 is a bridge too far. To the downside, if we should break this cluster, 6625, and if we get into it, it could just be a sticky, sloppy cluster from, 40, 37 to 45. Oh, look, back up to 50. No, back in here. We can just get kind of stuck in here. If 25 breaks, then 20, but we have something solid at 10, and we have sold inventory below by customers, so shouldn't get much below the bottom of the expected move, which was somewhere around there. Last time I looked was somewhere around 30 or 35. I think the expected move last night, by the way, close to close, was around 31 or 32, and we closed at 80, 88. So really, the bottom of the expected move from yesterday puts us right about here. Here's the expected move for today, the bottom of it, or maybe around here from yesterday. So, gun to my head, I'm going to say that the yesterday's expected move holds. That would be a default assumption. So we close somewhere, give or take 5 points. I'm not one of those that quibble for a few points. And so I'm going to say a close in this zone. It looks like a nice fly to buy. So we were talking about SPX and futures. And so while we're talking about futures, without further ado, I will turn the mic over to Chewy, aka Bad Hombre, and I will put mental cues levels on.
Good morning, everybody.
Good morning.
So, I think if I was looking at this a few hours ago, I'd tell you I want to push down or rip down for logs to get in a really nice buying position. Obviously, that happened overnight with the government shutdown. The rest of my thesis holds true. If we're holding 6,700, I'm long all the way to 745, 67.45. So
wow, that's a big range. You're looking to make some money on that one, huh?
I am, yes, sir. If we start to hold below 6,700, I might have a 670 target. if we can't hold 6,700. But that's as far as I'm willing to say on my short theory there. And the short theory is weak, in my opinion. I also am seeing a bit of a choppy morning as opposed to a nice move right here at open. And I think that will make us look even better for our calls or longs.
So we're looking for some kind of breakdown, reclaim to get long and ride for a while.
Well, I think the
No?
breakdown has already happened.
Right.
Yeah.
So we missed the bus. So some people missed the bus.
Yeah, it looks like it. But
I jumped on the bus and got off when the bus became express. I said, okay, I'm getting off this bus.
Doc rode their 2 train. I like it.
Right.
So I think we're looking really good for a nice clean trading day. I would definitely be cautious to jump into anything at open. At least wait 15 minutes, see if you can, and I think things will be a lot more clear once that settles.
And by the way, how do people get to trade with you?
In the futures chat, there in the Discord. While I'm on voice, you can be on Doc's voice as well as my voice chat at the same time.
And they can see both screen shares at the same time?
Yeah, I'm not screen sharing right now as I'm in Grenada. I'm on vacation, but yeah.
Speaking of Grenada, it's a good thing that Reagan invaded Grenada and kept us safe so that Grenada didn't invade us. Otherwise, we'd all be speaking Grenadese right now.
Which I think is English.
Right. Yeah. Right. We'd all be walking around with hand grenades as like necklaces. Yeah. Okay. Anyway, so I mean, it's kind of simple, and again, the main thing, gotta keep an eye on VIX. Gotta keep an eye on VIX, you know. Oh yeah, I forgot to throw in all this other flow stuff. Let's throw that in for fun. So, of course, we know it's this seasonally weak October. I have to say that with a sonorous tone. It's this seasonally weak October. And so people are kind of nervous about that. But then there's the old, is it a truism that a hedge market never breaks? And maybe people are already hedged for this. We kind of know they are. We've seen what's been going on with VIX. And we've seen what's been going on. Somebody's talking in the Discord, so I got to mute that. So maybe we're already hedged, although I don't see a lot of big stuff, but there's a lot of stuff out in December. But we got to watch VIX, and let me see if I can screen share this. Hold on. I'm going to have to unscreen share and share if I can figure out how to do this. Hold on. Let's see. Let me stretch the limits of my technological prowess here. Okay. Let's see now. Okay, we're just going to try it this way. Let's see if this works. Not great, but good enough for now. This is VIX. Now you can't see the numbers because I couldn't figure out how to get it so you could see the numbers and see what's going on here. But this is 18. That's 18. No, excuse me, that's 17. My bad. That's 17, 17.5, 18, something like that. I have that on another screenshot and whatever. So what's this telling us? Over 17, Mark, and this is customer side. Customers are along these calls. Oh, this might be 16, I forget. We'll go back in. over here, over 16 or 17. Here, we have this run up to this is 17 and a half. This is 18. And then things get stally. I'll have to go back and give you the exact numbers. I have them written out in my Discord. But let's not quibble over 16, whatever. As we get over here, market makers have to start buying VIX futures to hedge this out. And that's why I'm worried about VIX or watching VIX. And VIX over 17, I think that might be up here. I have to see. Let me see if I can pull it up and find it. Here we go. Okay. That's not so bad. So here's 16. So below 16 is party on Garth. This is kind of already hedged up towards 17. So here's, we got a little something stopping us at 17.5. And then it gets messy over 18 up to 20. And then up here, wait a minute, why is it red? What does that mean? It means that, as I've been explained to people who are new to the game, institutions tend to sell calls either separately or as part of flies. I trade my VIX with flies or with call ratios. Buy one, sell two or three further away, make it a free trade or even for a little credit, and manage it. And you have to kind of sort of know what you're doing so so you don't get killed. Really, you get killed on margin. You don't get killed if you just those spikes don't last too long. But anyway, so that's what's going on in the VIX space, and we really don't want to let the VIX get. Luckily we have this right here at 17.5, which is kind of where we stalled out. So we're going to stay in here, and this is already hedged out. So when we get below it, then some of this can get sold off, and it's out in October, end of the month, so it's not quite that immediate hedging, and the hedging doesn't work quite the same as it does with SPX. I'm no expert on VIX futures market making hedging, but I know enough. How do you join the Discord? Well, here's how. Let me send a shameless plug. Let me get my stuff in there. You join the Discord by subscribing, and if you're on Twitter, the link should be there. I don't know if I even have the link in the YouTube, which is probably remiss on my part. Let me put it in. Oh, you're on Twitter? Okay. It should be on where it says join me at 8:30, whatever. There should be a Substack link. But you could do it one of two ways. And this is for everybody else. You can join this way on Substack, or it might be easier to join on Whoop. I'll put in the WHOP link. 6 of one, half dozen of the other. Okay. So you can join Whoop, or you can join through Substack. They each have their pluses and minuses from an admin point of view. From your point of view, it's just whatever one you're more comfortable with. But Substack takes a way bigger commission. They charge more for their real estate. And we were talking about launching a special. We haven't like a short-term brief flash special. I was going to do it yesterday. I was going to do a 1 day JP Morgan. The collar was at 69 at 6505. So I was going to come up with something for $65.05 a month if you get a year and you get the premium. But that 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 ship has sailed, so I have to come up with something else, something new and clever. Okay, so that's kind of where we are. And this is Mentor Q, the heat map stuff. I use them. I use a few other people. Oh, let's look at VIX again from a different lens. Now that since I got you guys all thinking about VIX. And for that, not Gamma Labs. Gamma Labs has gone from being pretty good to being close to garbage. We'll worry about that later. Where's Gamma Edge? Okay. Something went wrong. What else is new? And yes, I subscribe to most of the services. I subscribe or I get them comp to me, whatever. It doesn't really matter. And I read what they say. Some of them I agree with. Some of them I don't. And I formulate my own opinion. As far as I'm concerned, for pure SPX data, I haven't found anything that's better than options depth. So if you're an SPX trader, one winning trade or one trade that you don't lose and it pays for the year, at least certainly for the month, depending on the size you trade. Okay. And a not as comprehensive alternative, but more budget friendly is Periscope Unusual Whales, $60. And they don't have an affiliate link. They're like too big. They don't need affiliates apparently. And they kind of do a similar thing. Not as good, not as granular, not you can't really see what you want to see, but if you're trading SPX and you have nothing else, it's better than a kick in the teeth. So where was I? I was waiting for Gamma Edge to load, and it doesn't seem to want to load. Okay, here we are. I want to look at VIX. I'm going to give you my honest opinion about all these services, if anybody wants it. I suppose some people would rather I don't. Spot Gamma is very good. I used to be a beta there, whatever. I have access to his stuff, but I kind of look at other stuff now. I like Brent's morning note. He's a smart guy, and I like the way he presents the big picture. So let's take a look. Actually, let's take a look over here this way. So here's that 16 inflection point. You can see the open interest. Maybe you can't. So there's lots of puts there, but it doesn't really matter. And I don't really know how to interpret what's bought, what's sold over here. But what I do know is we can see this path upward. And if we do, so they have it that we're stuck in puts. Maybe market makers are long puts there, not calls. I have to look under the hood and kind of see what's going on. And for that, I'm waiting for Options Depth to come out with something beyond that, like little dashboard thing. That's all they have right now. They're doing whatever you computer nerds do in the background. So what they have, I just have a screenshot of this only for VIX. So this is depth view. So this tells me exactly what's here in the market maker's hand right now. Let's look at the numbers. 169, 747, 934 at 66.60. And that's a combination of short of customer long calls and long puts, so it's long straddles at 66.60. So from a delta point of view, that's going to be hedged a little differently. But if over 60, then there's a path here. There's stuff in the way. Green means in the way, market may. But these numbers are small. So really, there's really nothing significant until 6,700 other than clusters, which will influence hedging. Same thing on the bottom, clusters. So we don't have much of an edge with this. We have an edge in the zones rather than in granular like we normally have. Now, every day at around 9:45-ish, the data that we get, and it's in the server, we disseminate it, whatever, we talk about it. Hedge funds come in and they sell iron condors every day, every day, every day. There's a few different ones. Some that sell 5 wide, around 7,000 contracts. Another one that sells about 10 wide, similar size, usually around the same area. And then there's a 100 wide gang that sell roughly 100 wide, 1 DTE, sometimes 2 DTE. And here's the 100 wide gang right here. Where are they today? How come I don't see them? Here they are. Is that them? I guess this is them over here. Here we go. Okay, so yeah, there are 25. Here's the ones they bought, the 25s, and here's the one they sold, 9,000. Now, there were more. These must have been bought up. And you see there's one over here, and then there's another one over here at 15. They do it in tranches. You'll see, so they did 3 tranches. Now, usually that doesn't matter. Very little delta to buy back that's not hedged already, whatever. But it did matter one day last week when, from a real up day, we had a real down day. We were down more than 1% or whatever it was. And suddenly, we were near that number. We had one day where we were suddenly near the number on top. They usually sell like a 2 delta or something. So that's that. One last thing, because you guys know I like, okay, so yesterday's trades, real quick. I do the trades here so you could see them. This was a fly that I had bought the day before that I closed. I paid $1 and change. I closed it for $2. Good thing I did because we overran the top. These are like, here I did a 5 wide iron condor for the 5 wide crowd. I guess closed it at 50%. Would have expired worthless, and this looks like a put spread. That's all that I had yesterday. And I do it here on TV, as I like to call it. So you don't even, quote unquote, have to be a subscriber. Okay, so this is stuff I just have for Friday. For the Friday, roughly based off of this expected move, bottom of the expected move, top of the expected move. This is always in my note. 65, 45, 50-ish is the bottom for Friday from last Friday. This is Friday to Friday. And 42-ish, 40 on top, call it 50. Give it a little wiggle room. Here's today's expected move based on yesterday's close. So it's going to be interesting. That's what I was pointing about, saying, so do we close over the bottom of yesterday's expected move? I don't know. Stay tuned. Quant data, they're good. I like quant data. Um, similar to Mentor Q, similar to Mentor Q, I like the guys. They do a few things that are a little different. I like Kill Pips's morning videos and stuff. And I'm not sure what he charges. They have pretty comprehensive stuff, and they have Bitcoin, I think, and they have all kinds of stuff. Quant data is good, and DM me later. I'll talk to Kill Pips about seeing if we can get a discount for you and or some of your crew. Boomer has Boomer trades. Boomer uh, also runs a little thing of his own. See if I can get a discount for some of you guys, or a group discount to anyone else that you're interested in. So yeah, I'm not looking to make $9 or $12 commission for affiliate links and stuff. We share information, me and Kill Pips and other people that have services, and hey, what do you see? What do you see? Oh, well, basically sometimes, well, I'm not as vocal as I used to be saying, well, I think you're wrong. I'm just, that's interesting. I have a different take. But anyway, but it's, and now going to putting on my psychologist hat for a second, this trading, especially like from your like office or your bedroom or your bathroom on your phone, wherever you're trading from, can be a lonely business. And so it's very important to have a community, I think. And research shows that out. Um, they even in like one of those trading books, like the not the turtles, like the one where they interview the top traders. They talk about the importance of having a community, and so interacting with other people is real important. Otherwise, you talk to yourself and you believe your own bullshit. And that's it. Okay, I think I'm going to go now. Wait, I lied. So let's see where the juice is. And thank you for reposting. Is that Tony? Now, this looks pretty juicy to me. I'm sorry, 85, even 15 wide, 45 cents. Eh, I'll put in one, give it room to add. If you're a 5 wide player, wow, you could go. There's even juice down at go below 6,000. I know some people like to get a quarter on these or below 6,000. That's a nice trade for 50 cents, I think. I'm putting it in. Whoops, wrong account. Put it again in the right account. On the call side, okay, sure. Let's talk about charm. Let's talk about charming charm. Well, before we talk about charm, let's talk about the gamma heat map, which is sort of the inverse. I know all this stuff up here doesn't matter. These are the long calls on the other side of the 100 wide gangs call credit. Here's a 100 wide gang up here around 70, 75, and all the way down here.
Hey Doc, real quick.
Yeah.
I have to head out, but for anyone looking to to trade the way that I do, look moving forward on that sale we're going to post, don't forget we're also going to run that promotion for the Boot Camp Academy. So just
Oh,
putting that
yeah.
out there.
And tomorrow you can tell them a little bit about the Boot Camp Academy.
I absolutely will.
Okay.
Good luck, everybody.
Okay, and so here we are. And so now I'm showing you this, and then we're going to talk about charm because it's going to be the inverse. So right here, we're in this market maker long zone mildly, market maker short, customer long zone. And this is a zone we can get trapped in. We don't really have a lot of supportive stuff over here. It's like light blue with little shades of red. It's don't torture the data time. Over 6,700, 6,690 is where you start getting some strong reaction from this. And now we're going to flip it to charm. So gamma is conditional. It's dependent on where SPX moves. If SPX moves up here, market makers have to do something. If SPX is down here at 66.15, they don't have to do anything related to the 6,700 area. So their response is conditional. So we don't know where SPX is going to move. But what we do know is that regardless of where SPX moves, time will pass. The day will end. Time will pass and options will decay. And so the charm profile is not much help as of right now because we have these big suppressive nodes where customers are short, dealers long over here. We have these large suppressive nodes down here. And so looking at charm a little more closely, so 6,600, 6,660 is what we have to get over. Just kind of like I said in my note, to get moving. If not, then what happens here just depends if these are out of the money or in the money. And this zone is 6,600 all the way down to 6,630. My chop zone. Here's my chop zone. So we could get trapped anywhere in there. So as of right now, 6660 is one potential close, gets a little bit above it. 6640, two, right down in this node. And 6630 if we break down. We don't have any good articulation in here. Now that's going to change as customers come in and start buying calls and puts. Did you have any other question about charm? Something maybe more specific or more general? Could be either way. I'll tell you something else that, okay, now the charm profile. So again, this color is suppressive. So if we're under it, we kind of get pushed down. It's hard to break through it because these options are going to decay. If we're above it, they're going to decay up and push us up. What do I mean by decay up? A 60 delta that's in the money, it's a 60 delta at 3 o'clock. If we stay there, it's going to become a 1 delta by the time the day closes. A 55 delta at 5 minutes to 4 will become a 1 delta if we stay there at the end of the day. And if there's enough of those there that shoot from 55 to 1, we get a close like we got yesterday. I want to show you one more thing. Let's look at it. No, that's not what I wanted to show you. See that? I lied. No, I lied. I misspoke. Okay, so now this is customers' side of the table. And the reason I'm showing that, Now let's just zoom it in a little bit. 66.20, let's say, and let's go 67.05. I'm showing this for a reason. Huh? I must have put the wrong numbers in. Oh, yeah. We don't want to say 200. 66, we'll say 15. Okay. There we are. All right, now let's think as an options trader. Let's just look at the calls. And this is customer side of the table. Customers are long, and well, there's also puts here, so let's forget about that for a second. Customers are short these calls over here. So they're short delta over here. What happens if we're at 67.75 at the end of the day? So this is basically the equivalent of a put. So that might be a 55 delta minus. This will go decay to a -1 delta and push us down. Just think like a trader. What's going to happen to yours? No, well, they have to buy to hedge this initially. Once we're below that, then they get to release their hedges. They get to release their hedges. But they have to buy, correct. Correct, they have to buy the hedge. They have to buy the hedge. No, you said it right. I wasn't following what you were saying. This is going to decay down, and then they're going to release their hedges as this goes from a 55 delta to a 1 delta, because they get shorter and shorter and shorter, so they have to sell into that, and that's 6,700. That's what's going on here. And the same thing on the put side. So you have to kind of think, what's going to happen to these puts and these calls? Are they going to decay? And in what direction? What's going to happen to the delta? And what's that going to force the market makers to do the opposite? Did that help, Flores? Okay, good. All right, 9:22. Looks like I missed Valsig's little chat. And safe trading, everybody. Oh, let's look at a fly for fun. Always fun to buy a fly. Where do I think we fly out? I'm going to go with if over 60, huh? I don't feel like pissing away a $1.40. Do we get over 65 today? You know, I don't know. I might want to approach it from this side. I'm gonna try that to start for 20 cents, and I could build around it with a call fly later on. See what happens. Actually, let me cancel that. I want to be one higher. Yeah, I like that better. I should be able to get the same thing on the call side, but I'll play with that later. And as far as selling a call spread, the way I like to do it, 20 wide, 15 wide, good enough. And then I'll add to that on the bottom. Bottom is juicy. I can even go 85, 70. No, hold on. Excuse me. 85, 70. 70 cents. What? That can't be right. It must be because they stopped trading, so they're crazy numbers. Yeah. $1.40 to 9.50. Okay. All right, that's it. Take care, everybody. Have a great day. See everybody in the Discord, etc. Oh, and if you want, you can always DM me on Twitter, on Discord, whatever. Find me. I'm around. If you have questions, subscribe or not, I'll go out of my way to answer them. Thanks a lot and have a great day.